Well, g'day there traders, thanks for joining me in this weekend edition as we take a look at the three US indices. We'll start with the Dow Jones, also the Nasdaq and also the SP500. What I'll do is that I'll perform some technical analysis and come to some form of a conclusion as to which direction the market looks to be heading, moving into the week beginning the 29th of April 2014. Once this is done, we'll then go through some additional stock options for us to look at as we transition into the week ahead. So this will be an additional video, pardon me. This is the video that we're currently doing, just the three US indices. So what I'll do, I'll start with the Dow Jones Industrial Average. And as you can see, as of Friday, we have what we call a one black crow soldier stick candle pattern. Now this in and of itself isn't too significant. However, when we combine it with the location which it's showing up at a multi-year resistance level, it tells us that the chances of this market moving lower are much, much higher. What we can see is that we've run into this resistance level since January 2014. There are a lot of weary investors looking at the market and seeing that their own trading accounts and positions haven't really done a lot, if anything, representing net gain or net loss, pardon me, for the year. And it's starting to bear down on the psychology of the majority looking at the market. Now, this is unfortunate for the market. It did start the year with quite a rosy perspective as we broke out of these highs in December, November. Everything looked to be moving bullish. But since then, again, we've had a lot of gyrations. We've had a lot of bearish opportunity down. We've had a lot of bullish bounces higher. And really, since the month of March, we've just been channeling sideways. Now at the moment, people are calling this a head and shoulders pattern. People are calling it also what we call a triple top. The thing is, it doesn't really matter until we break down below 16,004. That's the trigger on the Dow Jones Industrial Average, which has got me excited. This is for swing trades at 16,004. If you're an intraday trader, trading the market, looking at this intraday, I'd give you a recommendation to set up a trigger at 16,307 to trade bearish in the event that the market sells off. Is this going to happen? Who knows? No one knows. But it definitely does tell us that the possibility and the chances of this happening are increasing based on the candlestick patterns and also the chart pattern sentiment which is starting to take place. We could be transitioning from a bull market, a multi-year bull market since the bottoms established in 2009 into what could be an intermediate trend reversal where we just reverse back into the primary trend, or in fact a primary trend reversal. These are the questions you need to ask yourself and get a gauge on the market as we transition into May 2014. Now, drilling down on some additional analysis, the exponentials are sideways. That doesn't give us too much information. Yes, the simple moving averages are bullish, but if you have a look at this divergence, now this is what's very, very interesting to see. You can see that we are getting negative divergence. Price has eked out a higher high as of the beginning of April, yet the MACD is sloping down. This is telling us that price and momentum are diverging from one another. Extremely bearish signal taking place on the Dow Jones Industrial Average. So we are set up for success if the market decides to break down. Having said that, also the market can completely turn around on Monday, Tuesday, or Wednesday. It doesn't really matter, and break out above our trigger here, bullish at 16,665. But the chances of that happening are quite slim based on the candlestick and the chart patterns taking place on the Dow Jones Industrial Average at the moment. What I'll do for you now is take a look at the SP 500. The SP 500 is very similar to the Dow Jones Industrial Average. It's not really telling us a lot, is it? I mean, it's a little bit more choppy. We do have some upper structure, some lower structure. And we do have a support line below where we're trading at the moment. So my bearish trigger is 1,842. Trading down to 1,813. We've got 1, 2, and 3. And this is the bullish trigger here, 1,901. I'm not getting overly bullish unless the Dow Jones Industrial Average also breaks out bullish. I mean, it's as simple as that. Nasdaq to finish with. The Nasdaq is the most bearish of the three US indices. The reason why, if I just get the right color, is the fact that we're establishing lower highs and also lower lows. So whereas the Dow Jones Industrial Average is just consolidating sideways, all right? The Nasdaq is actually already trending lower. Now, by definition, this is a bearish trend. However, if you take a look at the bigger picture on the Nasdaq, what could be happening is that we could be setting up what we call a larger head and shoulders chart pattern. All right, you can see that basic form right there. Now, the bearish entry, 3,942. Write that down, 3,942. If we get a close below that, then we've really, established a bear market and what could be a very, very significant and quick market crash, market panic sell-off. Now, that is a worst case scenario for the market. Of course, I don't want to see that happen, but it's definitely a possibility, and there's the likelihood that that could eventuate if we get a close below 3,942. For shorter term traders, swing traders, and also intraday traders, 4,060 is the level you need to watch this week. If we get a close below that, we're coming down to support, which is really going to test, again, this lower level at 3,942. Do I have a bullish trade set up on the Nasdaq this week? No, I do not. We've got the 50, we've got this perspective box, which is a Fibonacci retracement box. The trend is downward below the exponential moving averages. Everything looks bearish across all three of the markets, more so on the Nasdaq, pardon me, but again, we're just waiting for that confirmation on the Dow Jones Industrial Average and also the SP 500. So if you can take anything away from this little presentation which I've just performed for you, it's simply to, again, be cautious on the bullish side of the market and any bullish positions that you're in, and look for opportunity on the downside, which I will present to you in the next video as we take a look at our top 12 individual trade list. So all the best, everyone. Thanks for watching this recording. Goodbye.